Let's get into a little bit of the future of Ethereum and whether an ETF is in the cards. We'll break it down for you guys, give you some insights there. You don't want to miss this. My name is Paul Barrow. Welcome back into TechPath. All right, let's get started. I want to thank our sponsor, iTrust Capital, looking at long-term holding on crypto assets in an IRA. This is the place to do it. Make sure and check our link down below. You'll be able to get a $100 funding reward if you decide to go in that direction. Of course, if you're into getting your taxes in order or maybe planning for 2024, then crypto IRA is the way to go. Check it out. It does help the channel out. All right, I want to get into a few points here on Ethereum and whether or not this ETH ETF will occur around that May time zone, because this has been kind of the date that's been thrown around. All right, so I'm going to go to this first article, SEC delaying BlackRock spot ETF. A couple of points I want to hit on here in the article. Commission finds it appropriate to delegate a longer period within which to take action on the proposed rule change so that it has sufficient time to consider the proposed rule change and the issues raised. This, of course, is looking at this first potential around March. And then the SEC also delayed decisions on every spot Bitcoin ETF application before approval, including BlackRock. So this is a kind of a theme of the SEC going forward. Gensler also implied shortly after the approval it was seemingly pushed to approve the spot Bitcoin ETF. Now remember that, the challenge that the commissioners have had is that they could have approved this at any time, and overall it probably would have helped the markets, but instead it's kind of put the markets a little bit unstable. It's obviously for Bitcoin hovering around 40K, that's some of it. Now, James Seyffert was talking about other ETFs out there. This, of course, is the ETH ETF with Fidelity, also delayed, but he expected this, and this is something he and I have talked about, is that really the date that matters most is the one in late May. That has a very unique timing here, obviously with the halving, and maybe even a rate cut. So there's some interesting things happening here over the next few months. Could ETH have perfect timing on this? And we'll see, because if we do get an ETH ETF at that period of time, I think it could really be in a very good position. Coinbase institutional exec says that crypto can go mainstream now, of course, with the spot Bitcoin ETF live. And there's quite a few things that he kind of hits on. But of course, if you look at just one of them, and that is the cumulative volume of what we've seen already in a very short period of time, 3 weeks out. And now we have BlackRock kind of claiming a big, huge win in terms of their continued acquisition. When I say they, assets under management in Bitcoin, but continued acquisition of Bitcoin in a spot ETF. So pretty big deal that we continue to see this kind of movement. A couple of points I want to hit on in this article right here. I'll go in the highlights over here on the sidebar. A couple of points I want to hit on. There's a few experts out there predicting whether or not a spot ETF for Ethereum will get approved. And some people are anticipating this to be somewhere around a 75% likelihood. Let me kind of zoom in on that just a little bit for you guys so you can kind of see it a little bit better right there. And then further into it, this was the analyst saying that SEC were to deny the current application for ETFs in May, then there'd be an inevitable appeal. So May is really kind of the date to watch for sure. And another one I want to kind of hit on right here, he reckons that the SEC will opt for the path of least resistance, especially after what we've seen within the GBDC case and what we saw as a result of it, meaning an approved ETF. They also talked a little bit further into here. It says, hey, listen, I would just say that there are two very clear bear and bull cases for ETH, both on the approval odds. We believe the odds of approval are over 50, but not nearly as confident as we were about the Bitcoin ETF. So that was an interesting statement that, yes, it's still a very, I would say still a bull case, but the point being is that they kind of reference like a 75% possibility here. I don't know why they think that would be the case, but yet at the same time, they're about half and half. Interesting stuff out there. Further into the article, he hits on a couple other things. Says all the ingredients are there for including our existence of a large, robust, regulated futures market. This, I think, is the bigger factor for ETH. I think there's a huge opportunity here because, one, everybody loves earnings, and Ethereum has earnings, so to speak, when you think gas fees. And I think that would make for a much more interesting ETF for sure. ETH is more complex than Bitcoin. However, also timing is uncertain on this. So I think also this is going to be bearing down onto whether or not we have a macro condition changing here in the US. Further into this, it's been caught in a narrative squeeze between excitement around Bitcoin and this really kind of this rebirth of what's happening with Solana. Solana has had a huge rebirth, and it being the #1 chain that really kind of competes with Ethereum, I guess if you had one in terms of comparison there. So last in the article was, in our opinion, the SEC approval of the ETH ETF in May. It would need to classify Ethereum as a commodity, which they've kind of done, similar to Bitcoin rather than a security. So that, I think, is still on the positive side going forward. Watcher Guru was in saying, listen, here's a new kingpin here, and that is BlackRock, now holding 45,000, almost 46,000 Bitcoin, worth over 1.8 billion for their spot Bitcoin ETF. That's pretty significant considering they started kind of from zero. So a big ramp up here. James Seyfried goes on and says, I don't know who needs to hear this, but ETFs aren't the market themselves. And then, yes, they're now a big slice of the pie, but there's also a lot more to the pie. And Bitcoin ETF inflows can coincide with falling Bitcoin prices. And one thing, when you look at outflows, can also coincide with rising prices. It's pretty easy. I think most people would say, yeah, people might be, when Bitcoin is falling, people are buying. So you're seeing going into an ETF because this is longer hold plays. And when the market is ripping, the likelihood is they're taking profits, meaning outflows. So that's kind of the situation. The difference is GBDC's outflows, because that's, I think, more of the interesting point here is how long before we see some stabilization for GBDC on that. Moving on here into where is Bitcoin going? What are the micro pressures on it? How will this have an effect on ETH overall? This is, of course, Arthur Hayes talking about. He's always in the news about this for interesting stuff. But he's saying it could go down to as low as 30K. I'd be interested in hearing you guys on whether or not you think this is a possibility of getting a 30K Bitcoin. Love to know. Drop some comments down below and smash the like button. It does help us in terms of exploration and people learning about blockchain and what's happening in crypto in general. But he explains on several geopolitical factors may impact the future of crypto. Further in the article here, Hayes argues that the market has misinterpreted the actions of speeches of Yellen. This, of course, was back to the dovish statements that we saw both from Yellen and also Powell, leading to a lot of this optimism in the early days. I will say in the early days, meaning the first really 3 to 4 weeks. I think reality has set in with Wall Street, even though we're still seeing a ripping S&P 500. But he does go on to say once Bitcoin touches bottom, then he's obviously going to buy a bunch of altcoins because he knows what's happening. So bottom fishing, I'll load up on Solana and, there's some others there. Further in here, Bitcoin is telling the world that the Fed is trapped between inflation and banking crisis. This is the same thing we talked about before. Inflation, if it doesn't slow, then if it does slow, what is the reason that the Fed would lower rates? So there has to be an event, and either that's going to be a recession or we're going to have something that is going to occur that would cause that. Or it's going to be the inflation doesn't slow and it's sticky at the top, which is bad on price stability. And at that point, maybe the Fed can come in and lay rates. But if the inflation is high, this is a problem because we're in an election year. Inflation continues to be high at the gas pump, at food prices. This is going to basically lose the Dems' opportunity to retake the House. But if inflation comes down, then the likelihood is we're going to see no reduction in rates, which means also financial conditions are going to change up a little bit. So I think it's kind of a bad position overall. He talked further in this. Powell is undoubtedly aware of these issues. He'll do everything he can to talk a big game, but rate cuts without having to actually cut them. That I think is true. I think we'll see a pause. And if you were listening to the ECB data coming out today, they also paused with Christine Lagarde. Pausing. Same kind of narrative pretty much coming out of the EU. Market doesn't appreciate this fact, but Bitcoin does. And I think that is the thing. Bitcoin is already seeing, and remember, Bitcoin is somewhat of a leading asset to what the rest of the market is doing. And it's all the leading in terms of a downturning Bitcoin while the markets are ripping because we're seeing this kind of this hiatus here. So I think a lot of this really plays into what the future might be. Joe Consorti added to this that there's some other macro factors here, and that's U.S. Treasury debt hitting $34 trillion. This is on track to reach $40 trillion by 25. This one more year, $40 trillion. This is crazy. I was listening to some numbers this week, and when you look back at Trump, he contributed almost $8.5 trillion. Now, granted, part of that was pandemic, but contributed $8.5 trillion to the debt during his term, his 4-year term. Biden's done about $4 trillion. So interesting that that is still occurring, because remember, this has a lot of pressure on not only the U.S. currency, but just in general, the U.S. Economy. And I think that's the thing that we've got to pay attention to. People lose sight of that. The economy drives everything, including what we might see in terms of these investment opportunities. James Lavish, hitting on the U.S. Treasury, held a 5-year note auction today that fell between not good and ugly. And what he's pointing at is that expectations went unmet. This is on a 4.055 yield versus the 4.035, leaving basically a 2 bips tail. So not good, meaning that these bonds are kind of going unmet, which means that we're dealing with still people on the sidelines looking at their current money market funds that are pretty much guiding the cash positions out there overall. And until we see liquidity coming out of those markets, it's not going into the stock market, it's not going into crypto. So are we going to see this lull of these assets for much longer than we anticipated? Especially, I wonder if this goes till May, because that's when we have to really pay attention. Just in, Fed also has raised interest rates on bank term funding. This goes back into the whole idea of regional banks. I'm kind of zoom in on that. That's a little hard to read. But they raise interest rates on bank term funding, emergency lending program, creating support for regional banks. So this is a problem if you're a regional bank and you do need an emergency lending. You're going to be basically jacked up on what you're going to have to pay for those funds to be able to bail your bank out. So that's a problem. So these rates on new loans will be no lower than the rate on reserve balances. So currently there's a record $162 billion in loans taken out in this program. So that's a big deal. That could be another issue with banks. Here was a interview on CNBC with Patrick Mchenry, and because he's talking about regulation and what this lines up for. But listen to what he had to say. I thought there were some interesting points here. Listen in.
Financial Services Committee. You got a ways to go. So you're joining us now, Congressman Patrick Mchenry, Chairman of the House Financial Services Committee. You got a ways to go. So
I got another year.
Yeah, you do, and you still got constituents that you need to look out for their interests. What does that entail in terms of crypto? What does that mean you need to do?
Well, I've got, look, when the House basically attempted to commit political suicide, Republicans in the House tried to commit political suicide in the fall, it gummed up 3 or 4 months of House floor action. So I've got major policies in capital formation, data privacy, and crypto that we haven't moved across the House floor, and I intend to get those moved across the House floor this year. We can still do big deals. We can still do big deals, even amidst the longest presidential campaign, general election campaign in American history. We can still get these things done and build consensus. And I think there's a need for market structure on crypto.
The recent ETF and watching the SEC chair sort of kicking and screaming, really, after the court said one thing, and that's no way to run a railroad, is it? I mean,
no,
shouldn't
it's ineptitude, and they went kicking and screaming after the courts demanded they take this action. Now you have more legitimate money coming in, flowing into crypto, some structure being provided to a new asset class that has its problems and needs some clarity under federal law to remedy it.
All right, so you can kind of see Mchenry still in the fight for crypto in general. You also understand that we're starting to see a position that I think is being taken by what's happening on Capitol Hill. And listen, if we get some movement here, this would be another significant narrative for crypto in general, because it would open up, obviously, what we've seen already with Wall Street. So some good things definitely in play here, I think, overall. Here's a veteran trader, Peter Brandt. He uncovers some myths about crypto trading or investing in general, and some of them are pretty common. But he noted that those who accumulate wealth rapidly often fall victim to bad habits and may eventually lose everything, just because they were there at the right place at the right time. So he emphasizes the importance of time and experience achieving success as a trader. It takes 3 to 5 years of being slapped around by the market gaining enough knowledge and competence to succeed. I agree with that to a certain extent, especially in crypto. Crypto, this is your first cycle in. It's going to be a little dicey, but there are huge opportunities for sure. Further in an article, he hits kind of like likened it to speculation to a marathon, debunking, hey, you got to be here much longer, overall. So definitely some good points, and I think good tips for going into the market as it is. All right, listen, we'd love to get your feedback. We'd love to get an idea of what you guys are really interested in. If you like token reviews, are you more interested in the gaming sector, or the bigger picture as we start to put together a lot of research on narratives that are starting to form in crypto right now, whether it's Solana, Avalanche, ETH, other networks out there, what's happening with Flow. Give us some feedback. We'd love to get that, and make sure and smash the like button right there. If you're not in our Diamond Circle, get in now. It's another great place to get additional content. And of course, follow me on X at Paul Barron. We'll catch you next time right here on TechPath.